A company purchased an equipment for 12,676. It has a useful life of 5 years. No salvage value. Tax rate is 41%, probably somewhere in Euro. Annual revenues are constant. For financial reporting, SLM is used. For taxation purposes, year one depreciation is 35%. Year two, it is 35 as well. And remaining, which is 30% in year three. So basically, they are depreciating everything in 3 years for tax purposes, whereas we are using SLM for reporting. Ignore all other expenses other than depreciation. So this will lead to, whenever we use accelerated method for taxes and SLM for the reporting, you will have a DTL, right? So that we have seen many times now. So the question is not whether it is DTL or DTA, but what is the DTL at the end of year one? Yeah, please send in your answers if you're online. I got one answer. Yeah, I will confirm the answer in just a minute. Thank you. It is DTL only. Whenever there's accelerated depreciation for tax, it will be DTL. I already told you that. You just need to calculate the value of the DTL. See, there are two ways to do it. One is by calculating the income tax expense in the tax payable, or you could also use the carrying value and the tax base, the other methodology that we saw. So that way also we will do, the solution we will do both ways, but you can use any one to calculate the DTL. Is it? Just one more minute, then we will solve. So pre-tax income is what? 7,192 minus depreciation expense. The 7,192 was the revenue minus divided by 5. What is that?
2535.
2535. So which is giving me an 4657. Okay. So this tax expense will be into 0.41. This into 41%. So that will be 1909. Okay, thank you. And the taxable income will be your revenue minus 35% of the equipment value, which will be what?
436.
We'll round it. Okay, 2755. So that is your taxable income. Your tax payable is this into 41%. So that will be 113929. So if we subtract 1909, your DTL minus your 1129, so that is 780, right? This is your DTL. We can also calculate this the other way, just for you can calculate the tax base. What is the tax base? We said the asset value is 12,676 minus the depreciation. Okay, finish this one. All right, note it down. Then we look at the other method. Done. Right. So what is the tax base? Tax base is the value as per the taxation computation of the equipment. 12,676 minus the 35%. We said that is 4437 as the depreciation. So that will be 12,676 minus 4437, 8239. And our carrying value in our books is 12,676 minus the SLM depreciation amount, which is 2535, which is 10,141. See, we said whenever carrying value is greater than tax base, go back to that table. Remember this thing always. Carrying value is greater than tax base, it will lead to DTL. Okay. So to calculate the DTL, carrying value minus tax base multiplied by tax rate. So here it is 10,141 minus 8,239 into 41%. So that will be 780. Shall we move on? Sorry. Scroll up. This one, prior one. Are we done? Same answer. So usually the carrying value tax-based method is easier to do because you don't have to do an entire P&L to calculate that. Now let's calculate some effective tax rate. So let's say this company is based out of, this is from your notes at France. So they have French and overseas ops, and this is all in millions of euros: 250, 150, 75, 210, 90, right? So a total of 250 in EBT. This is all EBT. 250, 225, 300. When I look at the income taxes from the income statement, so the French ops we paid, the income tax expense is 56, 30, 59, and the overseas, this is from income statement, I'm taking the expense directly from income statement. Overseas is 12, 20, and 21. All right. And then we have the deferred items. So for French, it was 8 DTA, then it became 4, negative 6. And overseas, we ended like that: 7, 2, 8. Okay. So calculate the effective tax rate for each of the years. So we can also have a total 75, 48, 80 plus 8 is 88. Okay. Calculate the effective tax rate. Sorry. For which year? Year 1. Okay. So, and say which one has the highest, which is the highest, year 1, 2, or 3. So year 1, you said how much?
Effective tax.
Effective tax rate, what is the formula? Yeah. But income tax, see, if you go back to the formula, what did we say there? Income tax expense. And what is income tax expense? It is made up of 2 components, I said, right? So if you go back to our first discussion on income tax expense, plus change in DTA or DTL. So I think you are only using the, yeah. So you have to use 75, 30%. Yeah. Okay. Understood, right? Yeah. So it is not only this number you have to use, you have to add the changes in deferred items also. So 75 by 250, right? See, here I did the total, etc. Like they might, so in exam, they will not give all of that, right? So they're just going to say what is the DTA, DTL, and you have to compute this. But the concept is to include the deferred items to calculate the effective tax rate. So the year 1 has the highest one, right?